I hope you guys are well, trading safe. It's the 12th of October. Last update I gave you was on the 6th, and I gave you two levels. I gave you the point of control for the global POC at 56.2, and then I gave you the Q2 in POC at 57,844. This is your quarter two naked point of control. It also aligns really nicely with your May point of control right here. And if we turn on our quarterly VR, you will see that Q2 came in really nicely. Same spot. This is where we were targeting. It's been a target of ours since June. It was all predicated on us breaking this structure to the upside, of course, as there were targets beneath us as well if you go from a volume standard. It was just one of those things where once we got resolution of this structure, we knew where we were going. And so this has been the big take profit area. That doesn't mean that I've sold all my Bitcoin. It just means that, hey, it doesn't hurt to lock in some gains, and if we break to the upside, which honestly I lean that way, I think that we probably will make all-time highs in Q4, and I've got a much larger harmonic for that, not this shark, but a crab taking us closer to like $90,000 by December, really, right around December to January timeframe. So yeah, I mean, if that happens, I've got extra capital to get back in the game, and I still hold a bunch of my longs from down here. As you guys know, that I was an SFP guy at $29,800 when we SFP'd our lows, and also struck the shark B leg right here and took out that anchor. That was really nicely done. Reclaim of the range, back tested a level, and off you go. So you got your reaction low. Then this is going to be your reversal or confirmation low, then you're off, right? So I did do some hedging short in this region. I have locked in a lot of those gains already. I'm not too eager to be the guy who says that he shorted the exact top. I do think that we could rotate higher still. We still have one level of resistance that we need to take a look at. And it looks like this. You can see it's 58,822. These are your quarterly levels from your July open to your monthly and quarterly level from the peak here. So that would be the next area of interest. Should we push up higher from here, it is going to be 58,822. In the next couple videos, guys, I'm going to show you some day trading techniques that I use to spot some intraday shorts, where I took profits at, how I determine that, things like that. So if you guys are into that kind of thing, especially harmonics, stick around. You will like those part 2 and part 3. If you're on YouTube, you're just going to get the whole thing uploaded in one shot, so good for you guys. Also, there's a free Discord link in my description. I've got a ton of trading books in there that I'm releasing slowly over time. And, we just have like a general chat as well for TA guys if you guys want to get in there and learn how to chart and do some of this stuff. So, yeah, very easy. I should note also that there is a key level that's based on math here, 50,708. I've done over 100 iterations of this formula to find these key levels. You've seen me use them before. They have an 87% strike rate, so 13 out of 100 won't hit. Maybe this is one of them, but it is on my chart for a reason, okay? And so we're on to part 2. We're going to look at some low time frame stuff. So we were approaching the exit of this consolidation here. Looking at our weekly, or not our weekly, but our monthly naked point of control and quarter 2 point of control coming in at 57,844. The high of this move was pretty damn close. I think it was 57,000. It was like 875. Yeah. So really close, guys. Really nice. And you did have this coming into it. So this is a crab pattern, okay? Coming out of consolidation here for the final move. You come down for A, you get a 618 to 618 here. Generally, this is a 618, and this is up to an 886. And then we go to a 1618 and up to a 3.618 expansion for the highs. And these come at the end of moves. So when you see these are expansions that are really fast, and they're really far away from price. Because anything over a 1618 in terms of expansion here, along with your 1618 here as well, and confluence with it. So yeah, those are generally going to be your best entries and your best places to short. And you can see you got an SFP up here at the highs as well. So kind of gave you that extra place to put your stop loss. And then it was just being patient and understanding that you had not lost anything. And then you had what was called a daily 80-20 setup, where we closed above the previous day value area high, found our way back in. And then what did we do? We just shot straight through the old range from the day before, and it just kept going. This position did net me a pretty decent profit. After I compounded a couple times for my entry, got brought down to about 57,452 because I sized into things. It was about 96.89%. I had other entries as well where you can see that they were higher and lower just based on trading the levels, because I am a day trader. I don't trade my full account with that, guys. I just trade like a certain account. So then you had this move down. Now I was looking for this as a bat out of the 618. You had a local 618 here, I believe, and it was a really simple move into that. Lots of confluence there, and it did hang around there for a little bit. But there was some things that told you this wasn't going to work out. So you can see that we came down into the 618. You also had a really nice crab into this region as well. I believe it was something like this. And all the expansions line up, guys. But you got to remember, this is a 15-minute time frame. So this thing lined up really, really nicely here with the crab, with a bat. But at the end of the day, this is what I was looking for. You remember we have this original crab here because this is where the range had began. This is your wick low of that range. So what you do is you come over here and you're just looking at your market structure, and you can see exactly where we kind of got cock blocked out of it, so to speak. Right in this region at 59,000 or 55,950. You wanted to see this level get reclaimed, and it just did not happen. So you knew this wouldn't be a viable long, so I'm still holding my shorts, looking for lower prices. And then what happens is we go into this pattern. Stick around for part 3 if you're on TikTok, and I'll show that to you. All right, guys, part 3. Yeah, so the bat did not work out with that tiny crab right here, if you recall. So what do you look for at that point as this is failing to get back above into the market structure of the old range? So you have this giant M pattern. Well, you have to look for lower and look at this as a failed back test. So we just extend down and we look for the next possible pattern. We say, well, we don't quite have a 618 here, but it would be viable to have a crab pattern from this region, and you got exactly that, a 1618 with a 3.258 expansion right here. So this would be a viable crab right here, and it comes right into where at the dot 133, one spot 133 of your local expansions from your original pull high to low on your local there. So really nice confluence also into the median of your old range, or well, not your old range, your current range. So if you were to look at this from a monthly perspective and just pull up October, you will notice that your EQ of the range is coming in really nicely right here where we ended up landing. Not only the EQ, but the last of the high volume node here. So what you need to notice is this is where people are going to defend, because this is where the last volume is. You can see all this buy volume right here. Also a lot of sell volume at the lows, which generally means you're going to bounce because you're trapping a lot of those, we'll call them dumb money, however you want to put it. People that enter shorts after it's been running down a lot, or even enter longs as it's been running up a lot. It's probably not going to fare too well in this market, especially in Bitcoin, as it's pretty brutal. So yeah, I mean, that's how you could have spotted this. I haven't closed all of that short yet, even though we are bouncing really nicely, mainly because it's a really small position. There's only about 15% of that position left. I took what I needed to. It's that one trade paid for my whole week of living. So for me, you know, that's, I don't have to trade again for another week if I don't want to. I'm just going to reevaluate price as it comes up here and see if we come up above and do something with market structure to make me think we're going to go to that 58,822 level, which we very well could, because nothing is broken here. We've not broken market structure, anything like that. Should we fail here and then re-lose, 55,950 is a pretty important level to be up front with you guys. Lose this, you know, entryway to this old range here. Yeah, I mean, I would probably start looking down to the POC of our monthly range again, and then also if we take these lows and lose this consolidation, well then yeah, our next stop is probably this key level down here around $50,708, $51,000, give or take. Also going to be the range lows of your monthly range, which generally that's where value is, and we can reevaluate from there. Hopefully you guys enjoyed this. You guys got something, you know, useful out of this. I try to make these things as educational as possible. I've been told several times to dumb it down. I'm trying, guys, but if you have questions, again, there's a free Discord link. I'll go over anything you guys want in there if you just ask questions and engage me. And yeah, I'll see you guys in there. Thanks for watching. Like and subscribe.